Does my auto insurance need to be in my company name? Such a trick question.
I feel like the auto insurance needs to be in the name of the owner of the vehicle.
Ah,
However,
there you
for
go.
liability protection, I would think the company needs some form of insurance protection.
All right. So
What's the answer, Toby?
you bring up some interesting points. So I've dealt with this a few times. It's really, yeah. This is like I say, it's a trick question because it's like, whose car is it? And are you in a state that requires the vehicle be insured or the individual?
Ah,
So like in this state of Nevada, we insure the vehicle. So it's what you just said. If somebody's name is on that thing, whoever's name is, it better have the insurance. So if you own it in your company, you better make sure that the company has insurance. Here's the rub. You're going to pay a heck of a lot more for commercial insurance than you are going to be for individual insurance. That said, you want to make sure that if you're driving it primarily for personal, in other words, if it's less than 50% business, there's no way in heck you want that car in the name of the company because you can't use all the beneficial tax provisions like 179 and bonus depreciation because it has to be more than 50% business.
mm-hmm.
So if you're less than 50%, you just want to reimburse yourself mileage. And frankly, if you have a vehicle that's owned by a company, insured by a company, anytime it gets into an accident, whoever's driving it is going to be presumed to be acting on behalf of the business, and you just brought liability into your business. So the only time I suggest people actually have vehicles in their business is when it's the reality of the situation. The business actually controls that vehicle, provides it to employees who run around. So like construction companies, I could see it. Somebody that's got a bunch of crews running around out there, I could see it. Otherwise, reimburse yourself. I see accountants come up and say, oh, no, we get these big deductions. I'm like, the people I know tend to rotate their cars every 4 years. If you haven't depreciated that thing off and you're like year 5 or something and you don't trade it in or you sell it, you have depreciation recapture, even if you wrote it all off. And you have a taxation of the personal use of that vehicle. So if you have it 50% plus, let's say you're 60% business, then we could go on a schedule and we look at the value of the vehicle and you have to pay W-2 wages on 40% of the value of that vehicle from a lease standpoint. So the IRS gives us a little schedule and it says, oh, you have a $30,000 car, that's, let's just say it's $10,000 of wages. And you say, well, I used it half for business. Okay, then it's only $5,000. You got to pay tax on that like you received it. So I just said a sports car. Yeah.
So in this case, I'm using my personal vehicle in my name. It's insured in my name, but I'm driving on company business, and I have.
Then you would be you're driving,
right?
So you're the insured. So you're always liable.
Do I need to do anything for my business to protect them from being sued?
What you can do is if it's a business that says, hey, I need my employees to have access to a vehicle, the business would have a policy as well. But it would also say the employee has to maintain insurance on that vehicle. So the business would kick in if they're having you do something for business. But if you're negligent, the question is your employer going to be responsible for it? They could argue it, but chances are they're going to hit your insurance first, and then they're going to look at the employers.
Okay.
So, and a general liability policy of an employer is going to have the provisions on it. You just talk to your insurance guy, but like ours here, we don't have a bunch of company cars, but we definitely have a policy that says if somebody's driving, on behalf of the company, they're taking a client to the airport or something like that, or driving, that you're covered. Remember running into that issue quite a bit. Somebody says, if you wrap your car with marketing decals, does that make every mile you drive reimbursable? No. That's not advertising, I promise you.
Yeah, IRS killed that quite a few years ago.
Yeah, the wrap itself, you wrap your vehicle, yes, you can write that off. But the vehicle and the miles, it matters what the intent is when you're moving your vehicle from one place to another. If you're traveling between offices, that's business. If you're commuting, that's personal. If you're going to take your in-laws to a football game, that's personal. I don't care how much swag you got on that vehicle or how much bling. I don't know the right word for it. You're advertising it. Yeah, it's like really cool. But if you do the miles, now here's the thing that I always kind of look at. So I have a lot of clients. I don't know what it is, but you start going into taxes, they tend to get a little bit cheaper, right? They start looking at dollars and they realize the value of a dollar. And so some of them have older cars. And the cars are paid off. They're not worth a ton. Maybe it's a $10,000 car, a truck, or something like that. You get 58 cents a mile reimbursed, whether it's worth $1,000, $10,000, or $100,000. The IRS doesn't say your mileage reimbursement is more if it's a nicer car. So my clients tend to like the fact that they can get tax-free money, non-reported cash that's deductible to the company over the years, over and over and over and over again, without regard to the actual expenses of the vehicle. You get a set amount. It's kind of like if depreciation was the same amount for every house. We don't care what the house is worth. You get to write off $30,000 a year. Then you'd start buying cheaper houses because you'd say, hey, I'll never pay tax on it.
And I actually had a client who did that, who would repeatedly buy old beater cars for the business, for delivery or whatever.
Yep.
He still got the same deduction as he would have if he'd been driving his Jaguar around.
That's exactly right. Remember my beautiful truck that used to sit right out there? It kept threatening to tow it, and it was a little ugly. Need to open an office 500 miles away. Crazy. You got some crazy people out there. All right, so hopefully that answers your question. The insurance, really, you need to decide whether it's going to be in your name or whether the car is going to be in your name or the company. If you're using an out-of-state entity like a Wyoming or Nevada, you have to register it in your home state if you're going to have a vehicle anyway. So I tend to say, own the vehicle in your name. It's cheaper insurance, keeps the liability to you, and reimburse yourself for business miles. Use the app I use is Mile IQ. Really easy. It's just Mile IQ. And you can even put in there, here's set trips that I do all the time, repeated trips, and mark them as a business trip. And by the way, if you have a home office, then everything you drive is pretty much business. I keep my car insurance that's also for business use under my personal name. But this year, State Farm is sending me the questionnaire asking if I'm using this car for business and if it's over 50% used. And they want to charge you more. If it's more than 50% business, they're going to want to say the primary use of that is now commercial, and they want to insure you in that way. If you're using it more than 50% for business, well, you're going to get a lot of reimbursement back, or you could actually have that one in the name of your company. Again, if you drop below 50%, you have depreciation, recapture, and bad stuff that can happen. So,
and who we're really going to see get hit by this is your couriers, your transportation people like Lyft and Uber, things of that nature, where they're driving as itself the business.
And I guess I should stop because since we're going back to the insurance one, and I'll actually click back to it just so you guys see it. You have two choices. You could actually do the actual expense method, or you can do the reimbursement, but you have to pick the year that you get the car. I don't think you can switch once you do. You may know that.
You can switch from mileage in a later year, but once you start taking actual expenses, you're stuck with it.
You're stuck with it. So if you do actual expense in the beginning, you're sticking to it. Actual expense means you're writing off the actual expenses for the business use. So again, the way they look at it is they say if it's more than 51% business, great, you pay tax on the personal use. It's 100% deductible. Even the wages it's paying you. Remember, like if it's giving you the car and letting you use a car and you have to pay tax on it, the company didn't give you cash. You just have to classify that as wages. The company has to pay its withholdings. You have to pay your withholdings. Failure to do so subjects you to some penalties and some nastiness. But you would end up paying tax on it. No money changed hands, but a fringe benefit is presumed to be taxable unless there's an exception. So if I give an employee a car, that's presumed to be taxable. to overcome the presumption, they'd have to be using it more than 50% business, in which case then they would just pay tax on the portion that was personal use. See how it gets a little muddy? That's why it's so much easier just to reimburse miles. The miles is 58 cents a mile, and it doesn't matter what the vehicle is and how much you spent on it. So if you have a Prius that doesn't cost anything to run and it gets 50 miles to the gallon and never, and the tires on it are $100, it's still 58 cents a mile. Whereas if you have Jeff's Maserati, he probably pays $1,000 a tire, right?
Oh yeah, yeah.
He's just trying to visualize Jeff driving.
I have to send it back to Italy, get the tires rotated.
Yeah, I just see you in a Maserati. If you ever come up in a Maserati, I'm taking pictures. Accountants just instinctually can't, like, they get into the Maserati and it like ejects them. All right. Because you're like, this is such a waste of money, right?
That's right.